Hey, welcome to the Market Minute. We're at the end of June almost. It's hard to believe. Boy, this month has just flown by. Lots going on. I'm going to go through a couple of different things here. First and foremost, I want to talk about interest rates. This is an article talking about a week ago. The Fed in the United States has decided to hold steady on interest rates, but in reality, they're talking about maybe even lowering rates. Very interesting. They signaled that they could cut rates by as much as half a percentage point in the upcoming year. Chairman Powell said that risks continue to rise, including the drag that rising trade tensions may have on U.S. business investment and signs that economic growth is slowing overseas. What they're basically saying is the trade tensions between the United States and China and all this and that. Bottom line is having an economic drag and eventually, yes, even the great United States of America and Donald Trump's surge in the stock market that we saw at the beginning of his presidency is starting to be tested. In the meantime, on this side of the border, bond yields are dropping significantly, and it's the first time that we've seen the 5-year fixed rate is actually lower than the variable rate. So if you have a variable rate mortgage and you're wondering whether you should lock in or not, please give us a call. Jonathan can analyze that for you. We're happy to do those analytics on your behalf. In the meantime, here's my friend Benjamin Tall from the CIBC World Markets talking about, well, how do you navigate the volatility in this market in the year 2020? Because let's face it, as we see what's happening down the States with volatility in the international trade markets, weakening economic results both in Canada and the United States, what is this? How does this translate? And basically, he's talking about interest rates and saying that in most times, and by the way, he's using the word recession. You're going to start to hear that because if you start to see the Fed's cut rates, you may have recessionary impact. Most recessions are caused by poor monetary error by a central bank raising rates. He doesn't see that. He said the Fed is telling us that they are going to cut rates, and he sees that Canada is actually in line and could very well cut rates as well. So with all this, what's happening in the stock market? The immediate reaction is the stock market has had a rally, and stocks have actually done really well. But I would caution you, there was an interesting point here from David Rosenberg, chief economist at Gluskin and Sheff Associates, basically saying it's very common for markets to have a pop and have a reaction to interest rate cuts initially, but that is often followed by a correction. So I'm just throwing it out there as a caution, and the one thing I've said from day one, and I've always said this, and I always will, I believe that all Canadians should invest like a pension fund. So what does that mean? It means you should have diversified assets beyond just stocks and bonds. A good example of that is the Canadian Pension Fund, Canada's largest pension fund. This is CPP. Now you look at this, and it's very interesting. They said pension funds tout rewards of active investing, meaning they're not just passively waiting for mutual funds to do what they do and react to the markets. Since they shifted away from passive strategy in 2006, they started investing heavily in alternative markets, including real estate and private equity. The results have been very positive. So again, I don't want to go on and on about that, but some of the examples that we've had and I want to share with you is Centurion, a REIT and a REIT. Centurion now is like $1.5 billion of apartment buildings that they own across North America. They're venturing into places like Texas, very strategic American purchases, and going coast to coast now. They're in Victoria and soon to be another university in British Columbia. Stay tuned for that. If you like more information, or if you didn't get the webinar we did on Centurion and you'd like a copy of that, send me an email. And speaking about real estate and non-correlating assets, we are thrilled to say we've now done our complete analysis on ICM's new fund. It is the ICM Property Partners Trust. It's a new fund. It's an open-ended trust, and Diversify Alternative Investments has completed our due diligence, so we now approve ICM as an investment for you. If you'd like more information, if you'd like a copy of that report, just send me an email, peter@peterkinch.com. More than happy, as always, to help you out with your strategy, your investments, and help you learn how to invest like a pension fund and navigate through these turmoil times of volatility, etc. Again, peter@peterkinch.com, and looking forward to talking to you soon. Bye for now.